Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back. It's Monday. It's not Sunday. Fortunately, there was some things I had to take care of in my life outside of crypto and Twitter. And we're gonna be doing a little bit of a different approach here on this video. I'm gonna be trying to explain or make sense of what was happening in the legacy market and how that kind of may have impacted Bitcoin, and whether I'm still concerned about that, whether that is gonna give us more downside or upside. And I'm honestly gonna be honest here. Take my analysis on legacy markets with a grain of salt, especially when we dive into bonds. I know how they work and I know what they are. But I have to admit that I'm not entirely, it's not a subject that I have dealt with on a day-to-day basis during my trading career. I want to have your attention first for ECOS. They're sponsoring this content. They're a fully regulatory compliant new exchange on the block. They're really cool. Exchange with everything you need, so make sure you check them out, please. There is a link in the description below and in the watermark. And thank you, Ecos, for being the sponsor to this YouTube show. Let's dive into bonds. So first thing, over the last actually the entire year since March 2020 with a major crash, yields on bonds have been rising. So that kind of means that governments, they need to lend money and they have these auctions for these bonds. You have like the 1 year, the 2 year, the 5 year, 7 year, 10 year, 30 year, which is the duration of the bond and the duration of the loan, basically. And then you have rates at which you the government borrows that money. So if the rates go up, the government, for example, on the 30-year bonds, they're paying more interest to whoever owns the bond, right? And last week, there's been kind of a little bit of a hiccup in the bidding on these bonds, kind of a lack of liquidity, so to say, where there was no interest in bonds, and the government, they need to keep their debt flow going. So obviously they had to raise, the rates would rise. And what started to happen is that people started to increasingly sell older bonds, which you can look at, for example, on this ticker ZB. And you can see here that it kind of is the inverse of the other chart, and that all the bonds started to sell off. At the same time, the S&P 500 right here had a little bit of a hiccup to the downside, and at the same time we had Bitcoin to this, which had a pretty sizey negative week as well, about 26% if we count the low over the weekend. Now, I don't know if it's a concern that rates are rising. Like generally, when rates are rising, people are concerned, and it's kind of, they feel as if it's safer to be in low interest bonds to park their money, and usually that's because they want to have some kind of safety. They choose to get like 1% or less over the course of a couple of years. For the shorter term bonds, the interest rates are much lower, and then for the longer term bonds, the interest rates are a lot higher. But still, it's pretty low compared to what it's been throughout history. And when people start to move into bonds, newly issued bonds with higher rates, generally that could because that could be because the rates are rising and they just want to ditch their old bonds because they can get a better deal. Once that becomes an issue where like literally all the money starts flowing into bonds, that is going to hurt any speculative reflation bet pretty hard. Bitcoin and tech stocks should get hurt really badly. But when I'm looking at it, I'm not too sure whether the current developments are of a major concern. First off, and I don't know if we can use any sort of TA on these charts, but obviously there is resistance in rates here. And the other thing is that we know that as long as the Fed is not lying, we know that the Fed is planning on keeping the quantitative easing going, keeping the money printer going, and they're aiming to get towards over 2% inflation within the next 3 years. The other thing that we know is that as of this weekend, the House in America approved the bill to get $1.9 trillion out to American businesses and individuals. And this has to pass the Senate. And I think this bill should be completely ready by the middle of March. So they're rushing to get it done by March 14th and get it on President Biden's desk and to sign it. So that's encouraging in terms of expecting more money to be printed, which is not really a good thing in general. Like, you know, like if you're not in investments, you're pretty much losing money because all that printed money is kind of taxation. So if you don't have the ability to hedge yourself with bets like Bitcoin and tech stocks, you are probably losing purchasing power over time. But for Bitcoin, and we're all in this Bitcoin bet, it is part of the reason why Bitcoin is on the rise, except outside of the fact that, you know, it's just the cycle. But adding to it that we have a lot of money printing is kind of inflating the Bitcoin cycle on top of what it was going to do anyway. So if we look at Bitcoin, we can see how it has not touched its like previous high here on the weekly chart. But if we start looking at the M1 money supply and the M2 money supply, we can see something rather interesting, which if we take the M1 money supply, it is the money supply that is pretty much liquid, that can actually be spent straight away, that's not stuck in some kind of long-term commitments or not as easily withdrawn from long-term commitments. And we can see that there's a retest on this trend line here. So, and it has retested its previous high here. So here on this chart, it has actually shown a perfect retest. And if the money supply is influencing Bitcoin's price development, and there's people out there doing the reflation bet where we inflate the monetary supply, and that is part of the reason why Bitcoin is going up, then obviously this kind of chart has to start making more significance. And then if we look at them too, a lot of people wanted to have a retest of 20k, previous all-time high from 2017. And on the M2 chart, I think I've shown this on Twitter, there is pretty much a retest of it if we look at the weekly. So if you zoom in on this chart on lower time frames, you'll probably see an even more defined touch on it. But even on the weekly chart, we can see wicks into the level, slightly not into it, but you know, if we grab this high here, then it was a retest. So kind of, you know, over time, this has been a long time ago, I would say that this was a retest. a successful retest. And if you compare that to Bitcoin, there was this gap here from here to here. The other thing that we can show here, oopsie doopsie, is that on the M2 chart, it has also shown a nice kind of perfect retest. So if the reflation bet is still on, if something happened in the legacy markets last week where kind of panic started rising, there was a bit of a liquidity issue within the bonds market, and then some technicals that kind of made things move and bonds have bottomed, then I think we're going to see continuation throughout this week. We're going to see the S&P 500 kind of get back on its horse. And I mean, that would be the bullish case, right? And if you are a trend trader, you just have to respect the fact that you buy retests. And on Bitcoin, obviously, there's a little bit of a gap left behind, but maybe that's just a front run, right? So I'm not making any decisive comments on this, but in my opinion, I couldn't really see any catalyst for what was happening in the S&P 500, for example, and with the bonds, etc., etc. It just seems like a liquidity issue. I'm pretty sure the Fed will kind of fix that because their goal is to keep inflation low and rates low, to keep money flowing, to have economic recovery. And to have economic recovery, they cannot pull liquidity out of the legacy markets. And if rates rise, that is something that would happen. Liquidity would actually start flowing out of legacy markets into more safe bets for the longer term, which bonds is an option for. And at the same time, if the Fed is going to keep printing, it's unlikely to happen, and then a reflation bet is on. So that's just kind of a little bit of my understanding what is happening with bonds and legacy market. And I think it's just a fluke. Honestly, I don't think there's a reason to panic. So let's dive into the technical analysis of Bitcoin, because we've been talking about this for 12 minutes now. So boop. Let's see where we start. Let's get into, I guess, the daily. So weekend has started. There is a 42 level here that got front run. I do remember that my initial target for this high was 43, and we didn't quite reach it. I don't know, somehow like I have targets, technical targets, that sometimes are not met, and then somehow in the middle of nowhere kind of become a level of significance later on. And this low right here is exactly $43,016. So I don't know, that I cannot quantify that. But the other thing to show here is this low. And you know, to recap our previous videos, I didn't expect Bitcoin to get this low, honestly. Well, I wouldn't have been surprised, but I was not betting on it. So that's kind of a little bit of a bummer. But let's wrap this low of February 10th, and then we can see this left behind gap between this high and this low. Kind of an inefficiency, and when the market comes back to test it, I want to see a reaction of it. Sometimes it kind of fills it entirely. Sometimes it just dips into it and bounces out of it. And in this case, it kind of looks like it dipped into it, didn't manage to actually fill it entirely. And now it seems like it wants to bounce, right? So that's a good thing if you're a bull. And then maybe we need to go to the 4-hour. We have our little cross here at 42 that we have not reached, quote unquote, yet. I don't know, but I'm still of the impression that this bull market is not over. And we kind of started to just correct as part of profit taking and fueled maybe by some anxiety in legacy markets. We have this trend line here. So first touch, second touch, third touch, and then broke through it. You can draw something else here too. This makes the case for at least a relief rally, but maybe even continuation. This is a wedge, in my opinion. So let's see. 1, 2, 3, 4, 5. All right. Kind of had a little bit of a peek through the trend line, then reversed hard, straight through the other side, straight through the diagonal. This could be the entire corrective structure and the end of it. It's not a guarantee, it's not a given. But if you remember last week's video, I was of the impression, and I still am, that we're not gonna get a correction that's gonna last as long as this correction. I think this is part of this rally, correction and then continuation. And if we zoom out further, we can see that this correction was part of a much longer rally. So I think we're still, building towards upside. But we're still at green. Green was a significant level for me. If we can claim green, that's kind of where I'm starting to think that this is potentially a reversal. And if that's the case, then I'm gonna start bidding more. I got a tiny long. Started adding at actually at the 47, 48 level, all the way down here, and I hope we see continuation. But I'm gonna be slow, because if we see continuation, the upside is going to be significant, and there's going to be enough time to start adding to it. I still think if this is continuation, we're going to reach 69 to 73 as our next kind of target. So is this kind of promising? Nothing has been confirmed. Hopefully we will see confirmation. I think there's going to be some kind of resistance around the 54, 55 area, and I think it's encouraging that we're seeing improved liquidity in most BTC USDs slash BTC USDT markets, because that liquidity is always good. It means that there is interest in the market and that people are not exactly trying to get away from them. So I think we're reaching the 20-minute now. We could be talking about ETH for a very short moment. It kind of is. Let's see. Yeah. The one. I'm still not too interested in trading it, although it has tapped a significant level here. But we're in between supports and resistances, no clear clean trend. Like the local trend has been down, the bigger trend has been up. It kind of feels like gambling here, honestly. But if we manage to see a little pop and then claim the original resistance here, I think there's a good chance to start looking for longs on ETH. That we'll see continuation back into the 0.05 region that we've been targeting for a very long time. Until now, it's a little bit tricky. So there's resistance here, but at the same time, we're in the middle of the range here. So the bottom of the range right here could also be a very possible region to retrace to. And we're not really sure how ETH right now correlates to Bitcoin. Bitcoin doesn't even know how it correlates to other things right now. It's probably going to see continuation, but if it doesn't, well, if it does, maybe, you know, ETH is not going to be able to keep up. It's been in pretty negative spotlight, which generally should provide an opportunity to buy it. But right now, I'm not really seeing it, and just seems like we're going to have to show some patience. And I'm rather going to get into ETH when I'm more confident about where it's going, rather than just sit in it and maybe it's just going to dick around sideways for some time, or bleed as Bitcoin rages, or maybe the new Ethereum improvement proposal, like 1559, is gonna turn things around and push back the liquidity and value that ETH kind of lost to BC and other things. Kind of have to see how the market is going to price that in. So sometimes it's just nice to wait and see what's going on, and then when the trend sets up, we go long or short. I think that's it. 21 minutes of me rambling. I hope that kind of makes up for the fact that you didn't get the video yesterday, and I should be able to make another video on Wednesday. So cheers, guys. Let me know if you liked the video, and catch you soon.